Good morning, everyone. Welcome to the morning Kappa 8 on a Wednesday. Very good morning to all. And I'm here to present the Midweek Futures Traders Technical Brief. And we are on week 3, July 2026. Let's take a look at the most popular products traded by traders over here. And the table shows there has been some form of neutral setups that are being formed here. Mainly the Dow, the Nasdaq, the S&P 500. And also we saw gold, silver going into neutral. For metals, especially, we have seen quite a big sell down, and it's now trading at support levels and bouncing off those supports. Whereas for the agri side, agriculture, right, corn, soybean oil, and soybean, we're going to highlight a bit on why the market is positive, and also what are the reasons that are driving the momentum forward. Asian indices, Hong Kong has gone into positive, and also our KLCI index, FKLI, is also gone into positive. And I'm going to also touch on the crude oil this morning, which has also gone into positive territory, mainly due to what's happening over in the Straits of Hormuz. So I will touch on that a bit, okay? So we'll move on, and right now we are looking at palm oil, our local product, which is actually seeing some kind of consolidation. And this consolidation has been dragging on since March this year. And this big range does seem like potentially there would be some kind of a movement in the coming weeks ahead. So why I'm saying this is because there has been a major supply side factor, which is actually going to affect the market quite a bit in maybe the months ahead. This is the recent launch of the Indonesia's nationwide rollout of the B50 biodiesel, which presents an opportunity for Malaysia to strengthen its existing palm oil markets while expanding its market share in selected destinations. Malaysia is going to benefit from this reduced exportable palm oil supplies from Indonesia following the B50 mandate. And so Malaysia likely going to benefit from importers who want to buy palm oil for their usage. So we come to the commitment of traders for the US indices. Indeed, we have seen quite a positive momentum and also very good performance where the US indices are concerned. And as noticed over here, the S&P 500, the number of hedges have reduced. For the Dow, of course, because of the new high, there are more selling activities. And for the broader S&P 500, right, as I mentioned, it does look like buyers are more keen. For Nasdaq-wise, there has been obviously reasons which we have seen that overvaluation has been one of the key discussion points, and we have seen that the number of hedging activities have increased by tenfolds. So from June 30th, we had a net short of 3,000, but we are seeing 30,000 of net shorts in the Nasdaq futures. So this is indicative that people will be agreeing to the fact that the Nasdaq index is trading at a very high value at this point in time. So moving ahead on commitment of traders for agriculture, and this is one which I feel like is my favorite pick. We have seen currently that there has been a lot of hedging activities that's been happening in soybean and also for corn. This is mainly due to the fact that the planting season is in progress. But one of the sub-products, which is actually from soybean, a byproduct, soybean oil saw a reduction of 8,000 number of lots. And why I like the agri sector, mainly because there is going to be some sort of a weather play that is being imputed into the current momentum. As we can see, the US weather, which is actually very critical for the planting season, we are seeing that in the Midwest section of the US, there is a above normal temperature that is for the 6 to 10 day temperature outlook. And this could actually develop into much hotter conditions. And this could also possibly not a very good sign if it continues to become hotter as we go into the later months of the summer season in the US. And why I think it can be a critical point, because if this turns into a drought situation, the planting of all the agriculture in the Midwest part of the US will be all impacted, and this can actually drive up prices by a very fair bit. So we see that for soybean oil, if we look at what's been happening here at the 65.0 level, there has been a massive support, and the current prices have rebounded off that level. So, and US and soybean futures, in fact, has hit highest levels in more than a month, and forecast for stressful and hot and dry weather in the Midwest, and also especially renewed tension in Middle East is lifting prices at the current point in time. So for our futures market guide this morning, we're going to look at the soybean oil. So current profile is positive, and also the short-term setup is positive as well. And currently it's trading at 70.68. So we have a reference price of 70.15. So this will be a little bit of retracement from where it is, and should the trend is confirmed, we're looking at above 74.85 to be the profit potential price, which will give us a USD of 2820 in value. And if things go strong and goes the other way around, the potential loss price is below the 69.30 and giving us a loss value of $510. Let's move on to energy. Energy is one of the sectors which very much driven by news, and this is more like the Trump factor, and the ongoing war is something that he has used as a machinery for statements that he make over the social media, as well as making certain policies which are very difficult for the Gulf nations and also the major transporters along the Straits of Hormuz. So we have seen that crude oil, after a sell down, in fact, after the Iran-US war started, we have seen that the sell down has happened from 107 level all the way down to about $70 a barrel. And that is the point whereby we see there is a support, and that particular support we have seen a rebound of from that level of 70. So of course, when we see this rebound, we will look back into what news has driven this, and mainly is Donald Trump has reinstated the blockade on Iranian vessels transiting the Strait of Hormuz. And he had also announced, of course, this is not relevant anymore, that any cargo passing through the waterway would be subject to payment requirements. But the latest overnight developments is that he has already scrapped this proposal. But this morning, there has also been some observation on the crude oil performance, and prices have not actually retraced since the withdrawal of that proposal. So potentially we are looking at this profile being positive, and we may go into a reference price of 87.0. Current price is 79.89. And should this happen, we are looking for prices to retrace and go below the 77.00 level. And this will give us a USD value of $1,000 and potential loss price of below 90, above 91, which is a USD 400 in losses. So this is the last slide. We want to promote the campaign for our car campaign, and every trade that you do through us, you will earn an entry to participate in this campaign, whereby you will be able to win a Tesla car, and also we have got all the surprises, which are iPhone 17. So thank you all for this morning's, and I'm going to pass on to the next speaker. Over to you, Joseph.
Right. Morning, everyone. Welcome back to our morning kappa. Thank you, Vincent, on the midweek futures update. As we can see right now, what we have been looking at the Hang Seng Index, the index continue to move upwards and testing the 24,500 point resistance so far, and can see that the market now is looking at some of the big cap stocks in the Hong Kong, right? You can see that the yesterday, in tandem with the oil price that are moving higher, the aluminium related counters like 1378 China Hongqiao, as well as 2600 China Aluminium, are both moving up higher. Also, recently we do see that the tech stocks have been staging a counter trend rebound. So as such, sentiment now looks better, right, at the Hong Kong market. Meanwhile, the China A50, the track the Chinese stocks in the China stocks market. Now, this index also have two sessions of positive price actions, forming their base at 14,900 point level. So as such, I think the sentiment remains bullish at the China market right now, as well as the Hong Kong market, right? So we take a look at some of the trading opportunities in the Hong Kong market, right? Firstly, look at the CK Hutchinson stock code number one, that this counter owned by Li Ka-shing, right? The resistance breached the resistance of 70 Hong Kong dollar, heading towards 73, and second resistance at 76. Downside support is at 67. Then on we have the Aluminium Corp of China, 2600, and you can see that the counter have climbed above 8 Hong Kong dollar resistance on the back of high volume as well, heading towards 880 and followed by 930. Support is at 730. So we have two blue chip stocks in the Hang Seng Index this morning. Firstly, CK Hutchinson, number one, Changjiang, right? And then we have the Aluminium Corp of China, 中铝, right, 2600 stock code. As for the China stock market, right, looking at the this share price performance yesterday, most of the counters closed in the positive territory. This morning we'll be looking at the counter, right, 002156. I can see that the shares have climbed above 77 Chinese renminbi, right? So they are heading. If you look at the pattern over here, right, clearly it's a very classical ascending triangle. You have the higher high, and then you also have a higher low, right? And then the volume is concentrated on the last few sessions. So once this Tongfu Microelectronics 2156, they break past the resistance of 77. Likelihood they'll extend their upside towards 83 and followed by 90. Downside support is at 70, right? So can actually look at 2156 in the Chinese market right now. Just key in the stock code, and then you can find the shares in our trading platform. You no need to look for either Shanghai or Shenzhen, right? You just have to key in this stock code, and then you can take a look at the platform. Now, another news that I want to bring to your attention is apart from the oil that's happening in the US Iran, right? One important the news that markets looking at is what is the inflations will be at the end of this year, and what's the Fed decisions on their interest rate, right? So yesterday the Fed chairman Walsh have made a statement to the US Congress, right? And important is not about what he mentions. Important is how market react to his speech. So we look at right now what market was previously is that market is pricing a one rate hike as early as July, end of this month. But after his speech yesterday night, right, the market have actually moved towards 375, which means right now market tends to believe that there will be no rate hike in July, but there might be one rate hike at the end of this year. And look at the December, right, the probability of rate hike have actually skewed towards 4%, right, end of this year. So 1 week ago, more people believe it will be 4.25 or even 4.5. But at this juncture, these traders have actually closed their positions and they are moved to a 4% as of this morning. So after the wash testaments yesterday, right? The market have actually thinks that there will be a rate hike, but it's not going to be a big rate hike this year. So as such, that will give a sentiment, boost the sentiment on the growth stocks in the US market because growth stocks, since their P valuations is very high, is very sensitive to a rate hike. Whenever there's a rate hike, you can see that the growth stocks, the tech counters will tends to actually move downwards. So once the risk of rate hike dissipates, or the quantum is not that big as the market thinks, right? You can see that the funds will be moving back to the tech counters again, right? So that's what we are looking at, and you can see that recently the S&P also moving high, right? The low is actually building higher, and right now we are moving into a US earnings season in the month of July, and based on the technical setup, right, you can see that the S&P remains bullish so far, and tonight there will be earnings results from Morgan Stanley. You can see that the share price have a break past 225. Next level will be 235 and followed by 240. Right, downside support is 215. Right, I think the coming to this week and next week, as more US is going to announce their results, more activities can be seen in the US market. Right, and as for the Malaysia FKRI, right, we are the index charged higher and climb above 50 days moving average yesterday, right, eyeing to breach 1730. Right now, I think the past 2 weeks, a lot of people are asking me that what is the directions of the FPM KLCI. Right, I think that market remains bullish. Right, our research remains constructive on the market. And one important clue that I want to bring to your attention again, right, is this table that we have been always talk about this table during our market outlook sessions. Right, we have been saying that based on the past pattern for the past 10 years, right, in the month of July, right, the index are usually close in a positive territory. Right now, this clue will give us one very important strategy is to actually look for FBM KLCI whenever there's a weakness in the month of June and also early July, right? That's where you can actually catch the bottom and then play on the breakout. Now, if you want to have your second positions to add on, scaling in and then have a follow through on the breakout. Secondly, the month of August also another bullish month. So at this juncture, what we do see is that 2026, right, our July, the index have a return about 3% return. We have not entered into the August month yet, but based on the pattern, it seems like this year, right, the pattern will be the same, positive month in the July, and then hopefully we have another positive month in the August as well. As such, we can see that our FKRI strategy right now remain long, right? We long on the FKRI and we set our support or stop loss at 1650, right? As for the FCPO, right, we have a negative bearish stance despite that there is a very strong weather impact right now, right? And we do see a very strong resistance at 4007. So as long as stay below 4007, we'll keep a negative bias until a bullish breakout happened. Like for Malaysia market, can see that yesterday, the Nation Gate have attracted a very strong buying interest, and there's a breakout on the 93 cents level so far. So on the upside, the next resistance will be 1 ringgit and followed by 1 ringgit and 8 cents. So 1 ringgit is actually a very important resistance, as once you cross the 1 ringgit mark, every bit will be 1 cent, 1 cent equivalent to 1% movement. So typically once a stock cross 1 ringgit mark, it has likelihood to extend the upside movement. So I will be looking at R1 1 ringgit, R2 108, and as this level, right, 815 will be the downside support for Nation Gate. Then on, since Queenie have published their report, right, Emilers have been moving on a high fashions. Breakout on the 33 cents. Next level will be 37 and followed by 41 cents. Downside support is at 29 cents on the Emilers. Okay. Now, apart from Nation Gate and Emilers, what we do see is that the oil related counter, MISC have climbed above 8 ringgit, heading towards 8 ringgit 45, followed by 8 ringgit 85. Downside support is 7 ringgit and 60 cents. And then on, we have Dialog that jump above 1 ringgit 90 cents, testing 2 ringgit 3 cents, and followed by 2 ringgit and 16 cents. Downside support is 1 ringgit and 77 cents. So we have two breakout stocks, MISC as well as Dialog Group. Okay, I'll stop here and pass on to Iftaar on the building material report. Thank you.
Hi, thank you, Joseph. So, morning, everyone. We have a basic material strategy today together with a press metal company update. I'll start with Cement first. Share price for Nelayan Cement has come off quite a fair bit, and I think this is likely due to two reasons. The first one is that Indonesia coal prices are stickier than expected, despite the falling off in Newcastle coal prices, and this is likely due to the recently announced Indonesia export control. And then second reason is that Malayan Cement has secured their first Q FY27 coal prices at 38% higher cost versus third Q FY26. So until we get a better clarity on the second quarter coal stocks, it may a bit hard for us to accurately gauge the earnings outlook. However, that being said, if we are under the assumption of a perpetual ceasefire and coal prices to eventually return to pre-war level, this should provide some relief to the overall coal prices. And this is just a shot in the dark, but maybe from second half of FY27 onwards. And then secondly, valuations are pretty much attractive at this point. Now it's trading at -2 SD, lowest in the past couple years. And historically, whenever the stock approaches -2, there will be rooms for potential rebounds. And -2 now translates to stock price of about 6.1 to 6.2-ish. So moving on to press metal, even though aluminium prices now have come off to 3,000 to 3,001 from a peak of 3.8 to 3.8K-ish back in May or June, prices seem to stabilize at this price now. So assuming prices to maintain until the end of this year, our 2026 average will be about 3,001 to 3,002, which is largely within our 2026 assumption of 3,250. However, if we look at MJP premium, the premium are still pretty much at elevated levels. Now it's at 11-year high, pointing to a near-term supply deficit. So, however, if we look at FY27, there are risks of the Middle East smelters resuming earlier than expected, and also Indonesia capacity aluminium expansion coming in faster than expected. So we might see aluminium prices to retreat closer to the $3,000 mark. So as such, we maintain our 2026 price assumption, but we revise our 2027 price assumption from 3,150 to 3,050. So as such, our TP now is revised downwards to 980 from 1050, and this is based on a 25 times FY27 PE. So as such, we have also lowered our 2027 earnings assumption by 5%, and this brought our FY27 earnings assumption to be largely within the consensus numbers. So I'll stop here, and thank you so much, everyone. Happy trading, and I'll see you tomorrow. Bye bye.